Hi, welcome to the Market Alert for Friday, the 20th of May 2016. Starting off in the 5-minute chart, you can see the market dropping 100 points or more in the first part of the session, and that was due to Lockhart and then, of course, Dudley a bit later on, hinting at a live June meeting for the Federal Reserve to discuss whether they're going to increase interest rates or not. We have no idea whether they are going to or not at this point, but they did promise last year that they would increase interest rates by 4 times during 2016. So all of this speculation has hit the market. The market broke the support that we were looking at yesterday in the daily chart. I'll just show you this here as well: 17,482, 743 and 17,397, and then by some miraculous fate the market returned back to the upside. We see the market then moving, and once you know it starts moving to the upside, that's the direction it's going to go in, because that's what exactly the plunge committee will do. If the market starts to break, then they're going to bring it back, and they're going to continue to do this with unlimited funds. They can print as much as they want in order to maintain this. So here we had a potential sell signal. This was at 1600 after Dudley had spoken, and this one resulted in a 42-point loss as the market reversed and then came back, having found support. So the key now is that we know they're going to bring the market back, having marked the market down. They'll be desperate to do this, as I've said before, and again I'm just going back to the daily chart. It's so important that they keep the market above these levels, and that's precisely what they did yesterday. So then we had a 20-point scalp. The market then reversed. We'd already got a tip off here that there was something wrong with the downside, but had you traded this one to the downside, that would have resulted in a 50-point loss as well. The market then put in another buy. Again, you can see this one working, the short not working, and that's because they are determined to move the market back to the upside above those support lines. So for the net of the day is a minus 59 points for me, which is a bit of a pain, but we get the odd day that comes along. And as it says on Zero Hedge here, Gartman also yesterday expressing the same opinion. Yesterday was one of the worst days of the year thus far. Frustration of why did the market do what it did yesterday? Well, the answer to that is quite simple, and I keep going on about this in the Market Alert. The powers that be do not want the stock market to go down. They have a vested interest in keeping this Ponzi scheme and illusion alive, even though none of the economic data, housing, everything you can think of does not support this market. Neither do the valuations, the earnings. It's purely and simply become a manipulated market. And as I've said, it's the upside is where they want to take it, and that's without a doubt where it's going to go from here. Again, back in the daily chart, you can see the market coming off these lows. Take a look at this price bar. You can see how the market was brought off the lows yesterday. Let me show you the bottom of this last move. You can see how the market was brought off the bottom, how the market was brought off the bottom of the lows of the days. And there you have why this repeatable pattern, why I'm forecasting that this market is going back now where it came. They just do not want it to go down. They've tried to break this and so far have failed. And of course now we've got all of the speculation in the market that June could be it is going to be a live FOMC meeting where Yellen will speak to Congress. Then we'll have to wait and see how they move the market, and I suspect they're going to move it back to the upside. She's likely to increase interest rates, and then the market will do what it did in January when they increased in December, which you can see there. You see the market falling out of bed. So that's how I see things panning out at the moment. I can't guarantee she's going to increase interest rates. Something may happen in the interim that she changes her mind, but now all of the speculation, and this is the job of the Federal Reserve reality show that it's become, is wheel out these members who then pump the markets with speculation. The markets move high. It does as it's supposed to do. If it doesn't, then they get the plunge protection team to do that bit for them, and we see the markets move back to the upside. News front today: existing home sales is all we have. G7 meeting all day as well, so it'll be interesting to see if anything hits the market from this. But again, I think it's already cast in stone from what we see in the daily charts and the repeatable pattern that we've had in February and also the bottom of the market in January, that this is destined to move back to the upside. The implied volatility is also indicating that as well. Didn't really move up. 1344 the day before, 1377, and you can see just up slightly, but nothing really moving there. The historic volatility actually dropping to the downside as well. So yesterday was just a shakeout in order to move the market back to the upside there. Right, that's it for today. As I say, you get the odd day that comes along and gives you a bit of a kick, but that's par for the course, and it's just part of trading. Fortunately, they are very few and far between. Yesterday just happened to be one of those because of the speed with which they moved the market to the downside and then brought it back slowly with a slow grind to the upside there. Mission accomplished. And now the way forward is clear, like I say, unless something else comes out of the woodwork that they didn't expect. But at the moment, they've got everything in the palm of their hands and are doing exactly what they wish to do, and that is to move the market back to the highs there. Right, that's it. Have a great weekend. If there's anything to report in between, I will let you know. Other than that, see you in the next one. Thanks for watching.